Welcome to the Twomey Stock Market Report. Today is May 18th, 2022. And what a difference a day makes. Dow down 3.5%. SPY down 4%. NASDAQ down 4%. Russell down 3.5%. As usual, the NASDAQ leads down. Interesting, you see the SPY was right there as well at 4% decline. So what did that tell us? Remember, if you listened to yesterday's stock market report, we're climbing the wall of worry. We saw our trend was in place, still down, but a lot of our short positions were starting to get ticked off. I try to break, especially when you hold profits from a long time, you want to break those stops into thirds. A third around we were way extended above the 10 EMA, so I had a third right above that. I had a third right between the two, and I had a third below the 14. The 14 never kicked off, so at least I've got a third. All my 2Xs got stopped out the day before. It is what it is. Our final indicator on the long side, in other words, on the selling side, whether we looked from the long perspective or from the short perspective, but we were short the market. That's when the 14, we were looking for the 10 EMA to cross above the 14 EMA and call it a day, right? That would say, okay, you got to get out of that position because the market trend has changed, at least for that particular time. Maybe short-lived, but we don't know. So we're climbing that wall worry. It kept us in the market in our trade, in our short-term trend. Would we have liked to have kept all of it? Absolutely. A day like today, 1,000 points drop in the Dow. I mean, absolutely. But what is it telling us? Number one, the trend continues. And it's a confirmation. Today was a confirmation, do not buy the dips. And I think that's why we had accelerated declines. I think the buy the dip crowd the last couple of days, whether it was institutional or private investors or even hedge funds, if you will, I think they clearly woke up this morning and they saw our target was down, and that told them between consumer discretionary to consumer staples, there's more to come. Translation, I mean, I listened to that whole, I listened to the CEO's remarks. A lot of people like Target. I personally don't. But with that said, I think they knew those numbers had to be that bad. If they didn't, he should be fired, because they're quarterly numbers. And he was saying, well, we really weren't sure about the supply chain and the cost of trucking and the cost of our help and benefits and all. Look, he should fire the people that run the financials. And so if he didn't know, because we all know inflation's been out there. We all know cost of and the supply chain and the cost of moving goods and the minimum wage has skyrocketed, et cetera, et cetera. Maybe they had a lot of their office staff, not the Target store people, working from home. Maybe all that led to people having eye off the ball. Maybe they really believed it was transitory with the COVID and everything else. I don't know. But Walmart missed, they missed. And the market just said, that's it. We're getting out of Dodge because we think more to come. Because if Target and Walmart cannot predict the debacle that we've been in the last several months, and they can't predict it. And they were saying, well, he kept saying, both of them say, well, the consumer's strong. They come in, they bought for Mother's Day and all this stuff. Yeah, but maybe instead of buying $100 worth, they bought $50 worth due to inflation, right? So, I mean, maybe because if they bought the same things they did last year, it would be 150. Whatever it is, I mean, that's just one theory. Do what you will. The technicals don't lie. The facts don't lie. The numbers don't lie. They mismanaged the company, period. Walmart, the same thing. So I think people now take a step back. I got to lighten up on any up market on any holdings if I'm still long from the beginning of the year, and I should start shorting the market. We certainly got spooked a little bit and took the back seat and waited to see where things were going to happen. And this is the problem. The rearview mirror looks great, but when you're right at that day's end and you have to say, am I going to go add to my shorts or add to my longs? It's really hard. And this is really where we are right now. So that, with that said, let's look at our sector analysis again. Difference a day, Nate. Energy is 5 days still up there, but today was down 2. It was one of those days everything got thrown out. Healthcare was up over the last 5 days now compared to because these are good performers year to date. The healthcare 2.5, the last 5 days positive, -3 today. Utilities, the last 5 days 1.6. -1.8 for the year, for the year to date, and today down -7.2. Not so bad. The carnage, not so bad. I'm surprised healthcare got hit as well as beaten down as it did. And we'll go over a couple of our healthcare plays, and I'll tell you a story on that. A couple of things happened to me while my phone was beeping all day while I was on the golf course. It really distracted me from my game, quite frankly. Consumer staples. We talked about that yesterday. Discretionary, I'm not buying into that. I really buy into the staples. People need to buy stuff regardless. Deodorant, laundry detergent, toothpaste, those kind of things. That was down -5.8 today. And again, I'll tell you a story about some of that. We go through all these other things we get in with shorting, except for materials. We get in with shorting or going long with our indices for now. Let's see. Stock review. Let's just jump right in. And, instead of getting into all our principles and theories, go back to the previous ones or email me and I can point out where it is. But our trend is down. Here's the Dow. This is the Dow, the diamonds here. And we had a debacle today, really carnage, right? Volume was kind of low, really a low volume day, which is interesting. So how do you interpret that? You have a big down day, but not a lot of volume. I mean, is there just not that many sellers left? I don't know. Time, we'll have to see. And we're heading towards the previous low. What did we talk about? Inflection points, right? Will it bounce off that? Or will it continue to go? Let's look at the weekly to get kind of a picture on that. All right. If we took Fibonacci down from the March, or April 2020 lows, COVID lows, I guess you call them, and drew a straight 1-to-1, we haven't reached the 0.382 retracement yet. We should, because we broke through the 0.238, so 0.236, excuse me. Should we get to 38% retraction? Indicates probably, so that means we're going to blow through this low. Is it a straight line? Who knows? But the trend's intact. We'll see where it goes. Let's see. We're not going to go into our short-term indicators on the Dow because obviously, let's do one real quick one. All the indices the same. One is the relative strength index. What is that? It's at 35.93. Is it getting oversold? Maybe. And let's just do the 120 just to get a kind of the relative strength. Obviously all are negative on our indicators. And the relative strength 37. The relative strength index for the 60 is 35. So something to keep an eye on it. And when we talk about short, let's go to the dog, and I got a third shot. I wish I had all my doubles, and I wish I had my 2/3 of my single, dog, and the DXD. I wish I had them all, but I don't. Preserve profit from down at this inflection point. I'll take it, right? And what did he say? We don't buy at the bottom necessarily using our system. Probably don't sell at the top using our system, but it keeps us in the trade. So therefore, if we're a little more yesterday we got nervous because below, once it dipped down to below the 14 EMA, 15 EMA, it's like, you know, used it as a springboard and took off. And right now, the 10 EMA is 34.85 and it closed at 35. So we're well above that. And all our indicators are positive. Okay. The relative strength index for the short is 63. We're getting overbought. So here, are we going to have a major, the short market gets, we saw this will be 1,000 points up tomorrow. I'm not into a prediction business, but what I'm planning on doing is adding to my shorts, and I'm going to take a 50% retracement as my goal. In other words, if we're down 1,000, I'd like to see the market get somewhere between 33 to 500% positive off that low. So up 300 to up 500 by mid morning to late morning to really early noontime kind of time frame at the max. See the market start to wane, after 12 to 1 would be nice. That would be telling me that it's a good time to add to my shorts. So if I see a point, 33% positive or 50% positive where we were last year, yesterday, so that would put the dog at 50%, 35.2 would be my first buy, my A buy, and I'd probably put a very small buy at 35.4, 33%, positive bump, right? So that's where I would be, and we'll have to wait and see. The indicators on the 120 all, return to, positive indicators all around. And let's just check what our our relative strength on the 120 is 62. So it's getting into the overbought territory, so you got to be careful. But, the trends there, you want to buy into obviously yesterday we should have bought in, or the day before, but that's revisionist history. So we want to wait for a bounce, add to our shorts, or if you're not short, you got to wait till have a day or two of bounce and then short the market. This could be a downdraft for a while. I don't know. We'll see. Okay, but that's what my plan is. SPY, real quick. The SPY, the relative strength index on the daily, is showing, a healthy 36. No, not, it's getting back down towards the oversold. Again, an inflection point is there. So we'll reach that low of bounce. That is just about 0.382 from the COVID lows, 20, let's get that date in our heads, March 2022. If it breaks below that, then we're probably a good chance heading down to 0.5, 348. So there's a good chance. So the 0.382 could be a bounce, or it could be breakthrough. So again, what would I do? I've got a small buy on the SH, which is the short version of this. SH. The short version, that's 1-to-1. Got a small buy at 15.9 and another buy at the 50% retracement, 15.86 of today. So if we get up to around 33% increase of where we were yesterday, which would be about 13.9. 15.9. 15.9. I was reading the NASDAQ. All right, let's read for shorting. I would go 15.95, my small amount, and then another amount at 15.86 to add to my position. And if it gets down to the 15.66, 10 EMA, certainly there. So between 15.6 and 15.9, you could start adding. You're going to scale in. Are we going down? Are we going up? That's something that we don't know, so we have to use our system. Relative strength index, it is 62 on a 60-minute. So we're getting in overbought territory. what's the other one? SPY. Oh, NASDAQ. All right, so let's look at QQQ. Same story. Nothing's different here. Nothing's changed in our daily. Still have that gap widening between the 10 and the 14. The 14 is above the 10. So we certainly aren't in a buy mode. Came down. We're going to another inflection point. And same thing there. The on the shorts PSQ, I'll give you the buy numbers there. And then let's just take a look at the weekly. We've already hit the 0.5 retracement, and we bumped up, and now we're going to come down and try to hit that again. That's going to be interesting, because if it breaks through that, we're going to, it should reach the 0.6. Not overnight, not tomorrow, but that should be the next inflection point. That's Fibonacci. Doesn't always work. It's a great rule of thumb, but I just use it as that. I mean, quite frankly, that if we break this low, the next inflection point is 280 on the NASDAQ. So, well, we'll see. We'll see what happens. I mean, we had a big downdraft today, as usual. The volume was fairly high, which is interesting. So we'll see what's going on there. I'm going to get... Let's see, this is a lot of delay on this chart. I'm just going to get rid of that because we know where our inflection points is. 60-minute, let's just look at our relative strength index, 35. So all these are saying they're, are we getting to the oversold, overbought 70, oversold 30? Absolutely, we've seen that before. So if we can get a bounce back up, let's add some shorts. PSQ would be the 1-to-1 in this particular case, and the 60 minutes is a 63%. Wow, so it's overbought. The 120 hasn't quite shown that. It's 61, and the daily is 61. Interesting. So, okay, so where are we going to go with this one? On the PSQ, 50%, I'd have some buys, a portion to buy at 3.8. I would also only 0.33% bounce back is 13.95. So I'd put a small amount there and more at 13.8. That's it. It's and keep your stop down below the 14. So you're below the 14 EMA, or this last low, you're at 13.4. Not a lot of risk there. Not a lot of risk. So that's all our, again, I'm going to repeat myself. This keeps us in the trade longer. If we did not see this crossover here of the 14, 15 EMA over the 9, which definitely would be a definitely sell mode. However, we got nervous, and we had such a lot of gains. There was a big gap up here to the 10 EMA. I put, moved up. We moved up the stop there. Then we had some stop between here and here, and then a stop below the 14. So we got a third. Hey, you take a profit, you take a profit. That's all there is. Would you have liked to stay in that trade? And if we, listened to our, system, we would have stayed in it. But it was getting kind of nerve-wracking. That's what happens when you get down to these. I call them, and this is not, actual factual. I just call them historic lows, right? We've had some really, the market's down. There's no doubt about it. I mean, we're over, my gosh, we've just come way down on the NASDAQ. And, I was playing golf with a guy today, and he was retired, and he had sold. He's got a pension. He's not too worried about stuff, but he had some money, and he had sold all in November. He wasn't sure what was going to happen. He said he felt like Nostradamus, and I started laughing because really, it's been buy the dip mentality, and everybody's been buying all the way down, and they're just, I think today was just indicative that the economy does not look good, and that scared a lot of people. So we'll have the bear market rallies. We'll see where it goes. If you want to take a look at some of our other stocks, the energy, healthcare, I'm laughing because I got a ding, UNH was bought. I put in a real tight stop. I don't know, not too much. It was, maybe within an hour, I got stopped right out. I'm not fooling around. I mean, we've seen too many stocks go and blow by this 200 EMA. It touched the 200 EMA today. I was a little aggressive. I bought ahead, feeling, I was kind of impressed by the market move the last couple of days. Thought healthcare with our sector analysis. But, there's no indicator here. We have not crossed the 14, the 15 EMA. It doesn't look like we're going to. The 200 EMA is now in play. I'm just going to watch it for now. XLV, I bought and I had a wider stop, which is the healthcare ETF. And I am, where am I in? I'm in way up here, 120, 130, around there. Hey, we'll see. I got a tight stop down here. I'm willing to take a little more risk because it's the ETF. We'll see where that goes. Again, no reason to buy because we haven't got our indicator here. I felt like I missed the bottom a little bit here, but like we say, we don't buy the bottoms, we don't sell the tops. So we'll see. That's a monitor. The consumer discretionary XLP, consumer staples. Look at this. I mean, a high of 75. It opened at 75.9, high of 70.96, the low of 71. I mean, just took out to the backyard and they shot everybody that worked in the building. I mean, this is just a massacre. Probably wrong choice of words, but net reality is, the sector was telling us there was no indicator for us to buy, but it was getting close. We're reaching upon the 200 EMA. Now this is in the watch category. I was in at 75 and I got stopped. I was in buy at 76 and I got stopped out at 75. So it is what it is, and we live to fight another day. Energy. Wow. Boy, energy still up there, but -2 today. Is energy one of those ones that, everybody got brought out back and shot? I don't know. UNG, I got faked out and I sold a lot in these big drops. It moves rapidly. UNG didn't really come down that much today. So it is what it is. I'm still in that. Our indicators are still positive. Our relative strength index is 61, and our the last high before it started coming back down was 73. What is the 60-minute, just in case? I'm still in it. I haven't added to it. We'll see what goes on. Relative strength index 60. So, maybe getting tired, but XLE, I am back in there, I believe. And I'm way up here. Let's see. I got back in there. I had 2 buys in, and I think I'm in around 82.2, it looks like. So that is still positive, right? Here. It's tighter divergence. So this one, did that just get taken out back to shot because everything was down today? That's typically how that works. Energy moves really fast. We'll see. I'm just watching. And, I got my stops in. If it comes down, I've got a big stop on that, well below the 14 EMA, but, we'll see what happens. I'm going to give it a little bit of room. I think that's really it. So where do we go from here? Add your stops. Add to your shorts on any, especially if we have bounces. We have a couple of days bounces and we look like we're going to not change our parameters on our technicals. You want to add to your shorts. We're in choppy trading sessions. I think we have a lot more to go down, but it's not going to happen immediately. So you got to be, we got to stick with our principles. Utilities, did it do anything different today? Let's stick with the XLU. XLU, no, we really have, the gap didn't really increase between it has not crossed positive. Our indicators are still kind of low here in the MACD. I'm kind of, I'm in it because it got close to the 200 EMA. Got a tight stop down here at 69.8. Boy, I don't know what to tell you. I would just wait for this inflection point to go, and if it goes, get in. And that's the Verizon. I kind of expanded Verizon, ILF, Latin America. Believe it or not, had a good run this year. These are all kind of our plays on dividend plays. Val raw material is ores company that's been taken. I've been watching it as it drops. ARC and ARCC and ORCC, small volume stocks, 8% dividend. Kind of watching those, not ready to get in. They have low PE ratios, etc. Bond funds. I don't know if I covered that. You should. TBT is weak. It's getting weak. Again, got flushed out here. I got back in. And it sold 85%, but I kept a little bit. The third, not quite. A little less than the third, obviously, but we'll see where this goes. If it got taken out back and shot today, I don't know. TLT's kind of moving upward, which is nice, but it may be a fake out. Hasn't crossed it. Our technicals haven't given us that indicator. So, and in fact, the TLT is showing up 42% relative strength index. Plenty of more room to grow as far as in the Schwab 10-year inflation protected treasury. Not doing so shabby. You say it kind of mirrors, it's going up like the TLT. We haven't got a positive indicator. If it goes sideways, that's okay. If TBT goes sideways, that's okay too. TBT's 2x, right? So TBF is not. So that's it. If we want to look at, I want to look at Tesla. Just that poor guy. I mean, he's got everything going against him. Bid for Twitter was overbought. I mean, way too high. Market imploded on him. He's losing lots of money in the stock market. Tesla is they're going to have to pull it back in a weekly. It's heading back to the last inflection point of 672. It blew by its 200 EMA. Didn't look back. Boy, I don't know where this thing's going. I mean, typically it bounces. There's a lot of buyers and sellers between 619 and 720. Maybe around 650 might be a buy and just see what happens. The next inflection point is 551. So it's got to get by all these buyers and sellers here, which was from May to September. So, that's a fair amount of buyers that are bought and sold. So, people, if it starts hitting that, if they stayed in it and it was way up here, they said they've been watching, they're going to get the break even, they're going to get out. If people had sold here and they watched it go up, their mission is going to be, hey, geez, it took off from there last time, I got out, whatever the story is, they may get back in. So we're reaching that inflection point. But none of our system has not told us to touch this one yet. So I'm not going to backspace anything else that we covered. So, I guess I'll reiterate one last thing. You want to buy. We want to see them. If you wake up tomorrow and the market's up 300-400 points, let's see where it goes to between 11 and 12. If it stays there and it starts to pull back, maybe you want to add a little bit to your shorts using the numbers I gave you. If it continues to run up, just wait and see. And then see if at the end of the day it gets sold off. I mean, nobody has time to sit around their computer, but if it's, log in at 3:30, if it starts to, if it's starting to pull back and selling is, people getting rid of them, those are short-term traders that push up the market, add to your shorts. If the market runs away and it stays up top, give it 24 hours. I mean, there's no rush here. This market is just out of control. And, I feel bad because I've talked to a lot of people who are, have just stayed in the market and now they're just sweating bullets. And I feel for them. I really do. I don't, they ask me what's going to happen. I said, I don't know. I mean, every time the market go up, I think I'd start selling a little bit and just hopefully we see some sideways movement for a while. Things calm down. But, the economy is in trouble, and the Fed is so far behind the 8 ball. I don't see this turning around. There's nobody driving the car. I mean, it's scary. So just after a day like today, if you take a step back for a couple of days, terrific. You can't play these inflection points. We went through our system and we were cautious of keeping our profits. If we just stuck to our guns and said, hey, we didn't get that last indicator, we would be sitting pretty good today. But I'll keep my third shorts the way they are. Not bad. I kept my profits. Not bad. If the market had gone up 1,000 points today, I'd be saying to myself, hey, thank God I sold 2/3, right? So, the key is use that inflection system. And even when we get the go ahead to either go long or short, with the final indicator, there's some often sideways and it can be in and out, but it's not going to be in and out like the last couple of days where, I had a lot of people I follow and they pay for subscription and all this stuff, services, really good technical traders, most of them, some fundamentalists, but they were touting buy. Remember we were saying, oversold in a relative strength index, etc. And we were saying, let's just be careful here. Well, if you had bought and then held, you get smoked. So that's it. Reach me, jim.net, search at comcast.net. Inquiries on a stock, fire away. I'll give you entries, exit if you're in it. Let me know what you are. Input on previous segments or topics you like covered. As I mentioned in the last couple of segments, I want to start migrating more towards, now that we got our principles down, verify the trend, look at our sectors, what's going to be the next play, what's that short-term trend look like, do we maintain our positions, and where can we start adding positions as the market starts defining itself. Shorting the market is always difficult. It's not an easy. Right now we're going to stick with indexes because I think that's the best way to go. At least from my side, if you want to pull something out and, short that stock, that's fine, but just be careful. Other than that, you were in the market to make money. We're glad our last third of shorts stayed in the market because today was a bonus day, right? When you're down 1,000 points in the Dow, and we'll see what tomorrow brings. And I wish you the best in these kind of volatile markets, and don't risk anything you need to pay the bills, right? This is not, not the time to be gambling, but it kind of feels that way when the market moves like this. All right, we're going to try to update tomorrow if I can. It's going to be a tough day to get something out, but in the next couple of days, definitely want to add to this. We'll see where the market goes and see if we can, start looking at some other stocks for us. Hey, thanks for joining. I'll talk to you soon. James Twomey from the Twomey Stock Market Report, and please reach out anytime, and we'll go over this until the next one. Thank you. Have a great day.